Welcome back. The big story today is the decline seen in IT names. The Nifty IT index is down 2.5%. There is concern about revenue growth slowing down for the Indian technology names after one of their global competitors, EPAM, lowered their revenue guidance and is now talking about a revenue decline in calendar year 2023. How worried should we be? Apurva Prasad of HDFC Securities now joins in to talk more about it. Apurva, your initial thoughts on the impact on the Indian IT companies. Anyway, the Indian IT companies had guided down. The revenue guidance was for a mid-single digit kind of growth. Do you think there is a risk that the Indian IT companies may not even be able to meet their full year guidance based on what we are seeing?
Good morning, Rima, and thanks for having me on the show. So what we had put out in our most recent note is the fact that HCL Tech and Infosys both, which have given out guidance, we don't see a risk to the midpoint of the guidance, based on our analysis of the customer cohorts. We think it's hitting midpoint should not be a challenge. In fact, if you benchmark it to what global peers have done historically and what global peers have guided this time around, the growth premium is actually lower this time around as compared to what it's been. So historically, that growth premium used to be about 500 basis points versus where the guidance is of some of the global peers. This growth premium works out to be just about 2 percentage points. So that's that mid-single digit number that you were referring to. In case of EPAM, look, yes, there are a lot of company-specific factors. Understand. So this number used to be 11% growth full year. At the beginning of the year, which is what they had guided, that was brought down to 3% a month back, and that number is now lowered to about 2%, a decline of 2%. So that's the drawdown in guidance over the past couple of quarters for EPAM. I would say a lot of it would be to do with EPAM-specific factors as well as their portfolio of services.
On that point, I think I read, I think a Kotak note, or I could be wrong, but they believe that 3/4 of the revenue decline is on account of these external issues and the headwinds. So yes, there is a part of company-specific factors, EPAM-specific factors in the lowered guidance, but it's also to do with the fact that there are external headwinds.
So, Rima, look, from EPAM standpoint, there's a very large delivery presence in East Europe, and what happens is there is, number one, a direct impact. And even if you X that out, you're looking at clients which are looking to diversify the talent pool. So there's a lot of second-order impact that starts to come in there. At the same time, if you look at the nature of services, the cost optimization related services probably a bigger part of the portfolio for Indian IT companies, which is why I think a part of the portfolio is certainly comparable. But I think if one is to look holistically, there's every reason that EPAM could be doing a lot slower than some of the peers. In fact, mid-tier peers should be able to do double-digit even in a tough environment. So what we are really suggesting is a more sort of stock-specific selective approach in the current environment.
Apurva, so I guess we all remember Q4 so clearly, right? Because of all that happened around Infosys. At that point in time, I guess the market took a view that this is more an Infy-specific issue. As we got through the rest of the earnings season, it wasn't that bad for IT. But now with this kind of guidance cut coming in from another global player, do you think it could spell further trouble for the larger players? I'm not talking mid-cap IT, but the top 4 Indian IT companies.
So you're right. Actually, there's some form of a divergence that we saw even in Q4. So if you split out between how some of the tier ones are performing as compared to the mid cap, small cap, you could very clearly see that divergence at play. So while the absolute growth rate is expected to come down, the aggregate growth rate is coming down significantly. FY23 to 24. The divergence between these companies is also increasing. So you're going to have somebody who's going to be declining this year. At the same time, there are companies doing 15% plus. So that divergence in a slower growth environment has actually gone up, which is why I was referring to a bit more stock specific and selective stance that one should look at. But yeah, I mean, the macro uncertainties have not gotten away, and where it is manifesting is really whether it is cuts in discretionary spend or whether it is delay in decision making, which is slower conversion from pipeline to bookings, or it could be in the form of delay in ramp up of deals. At the same time, pricing and volume related factors in some of the cases. So something which was more specific to BFSI and high tech is probably percolated to a lot more verticals. But yeah, with where numbers are, the note we just came out last week, I think we're fairly confident that the midpoint of the companies that have guided out has a reasonable probability that can be met.
Okay, got that. Apurva, just one final question before we wrap. The same note that Rima was, referring to earlier, they've said that they're surprised by the rally seen in IT stocks given this kind of demand. Is that something that you would agree with? And do you think that it's perhaps a little bit stretched, what we're seeing?
Yes, so we have seen outperformance, stock outperformance, which varies not just by the size of the business, and actually it's quite inversely correlated. We put out an exhibit actually demonstrating this. But yeah, I mean, pockets such as ER&D, for example, where valuations in some pockets could look like a stretch, are areas where we do feel that prices have gone beyond fair value. So yes, it's like I said, it is a bit divergent, and that also holds true not just for performance but even for valuations.
All right, got that, Apurva. We will leave it on that note for today. Thanks for the perspective. Let's see how this plays along. But Indian IT definitely remains in focus. Quick break on that note. We'll get you more on the markets in just a bit, including a spotlight on the FY23 performance in the banking space. This is our special segment, FinStreet.